Hey everybody, it's May 7th, 2026. We are precisely 4 days away from the May 11th, 2026 Bitcoin time cycle inflection zone point. And we are now really testing the patience of both the bulls and the bears. This is just an area where you would like to be. If you're not positioned, you're in a situation where if you didn't reload your portfolio, you are jonesing to get in. I'm dealing with that right now myself, but also through DMs and so on and so forth. I mean, the last time we were in a bear flag, I gave reload signals on the bottom and then I exited everybody here. Right. So as it was coming up, I was fully positioned on the portfolio. And after obviously getting out before this, as this was coming down, I forget exactly the price, we reloaded again to play the sideways channel. But the idea is that as it was coming up, I wasn't experiencing FOMO. I wasn't getting messages and texts from, clients or whatnot, the PPT members in private, just wondering about, what the heck's going on. It's like, well, man, the system is in accuracy-based thinking. And the mistake of not reloading on this double bottom when there was when there was a Vegas here, and I should have realized that there was a trend line. I mean, there was a trend line here, but it's like when you get into that prediction mode, you should just for your portfolio just DCA at a level around here, and if it breaks down, DCA again. To not be positioned, the pain of it going all the way up here, which was a possibility. It was at the bottom of a trend line with a Vegas. Uh, the pain of which is insane. But it's like I can't make necessarily two mistakes or one mistake into two. And it's like, is this a good area to take on a huge amount of risk? And it's like, no, it's not. It is not a good area to take on a lot of risk. You'll see a lot of people take sides here. Bulls, bears, they'll cite the reasons the 4-year cycle's changed. This time it's different because it's in alignment with the S&P 500 and it's completely driven by this institutional madness. There's always this narrative that you can believe in. But if you guys remember, there was the same narrative as this was climbing up to 124, 126,000, right? There was the same narrative that the 4-year cycle was different. Alt season hasn't happened yet. You should ignore the triple top. You should ignore the divergence in the RSI oscillator. You should ignore the hook from extremes on the CCI. You should ignore the 8+ leg counts up from the lows. Why would you ignore all those things that are based in truth? Because we can objectively see them and then just add up a weight on a scale and make it a decision. Because it's right now accuracy-based thinking is very difficult on me emotionally because I mean everybody's feeling the short term up here, the intermediate term is up, and if you feel that and you look at the price move here, you can get windows and just become someone's exit liquidity there. That's a possibility because we are in this ascending wedge in this bear flag still, especially now that the selling tail candlestick pattern has produced a break below it today. We'll see how today closes. Breaking below it increases the odds that we can come down and test this trend line as well. But as I zoom out here, I just want to show you guys something to not forget. The other thing to look for as this is kind of going down today is that the Bitcoin percentage of posts, the sentiment indicator, this says was at 100%. You might want to see that for a reversal, right? That's when it's peak euphoria that brings peak pain. Now we'll see what happens. It hasn't quite filled the CME gap, but it hasn't really hit the 200 yet. But remember, we understand this beauty principle concept. Things can move around things. Nothing is going to exactly play out. I mean, a lot of folks are looking at what happened in 2022 and they say it has to happen the same way. I'm open to it not. I mean, why can't this just come out here, test this, break out up here, then go sideways for a while and form a head and shoulders, and then we get a break? I mean, there's all these possibilities here. But to think that here is the lows and it's just going to go straight up from here, I mean, that is the lower odds thing based on the underlying, besides the price action, the underlying larger time frame, bigger picture bias, which is still in a downtrend. We'll show that on a weekly. Okay. So yeah, I mean, if we look at these bear flags, this has been a huge larger time frame bias from a short intermediate combination time frame alignment perspective bull trend. But zooming out now, it's now confronting the big picture bias of the bear trend channel with the RSI in, typically overbought territory where there's a chance that it could stall and reverse. You can see on this 2-day chart, we've had this sort of trend line that hit a couple of times here and hit here, broke now below it, try to break above it, and now kind of at this line again. Um, so, just a lot of ambiguity. And like I said, the hardest position for people to say is neutrality, uncertainty. I don't know what to do, so I'm not going to take a huge position. I'll be patient. But the FOMO on this, on some of the text messages I was getting from people is insane. Um, you know, it is what it is. But so from a so I'm thinking like as a portfolio manager and potentially position trader now, but the day trader in me said, look how well my zones were working. If I just shorted here and went long here with the contextual awareness, knowing that I'm going to maybe hold the short longer, I'm not going to hold the long up to here based on the potential that we're under the bear flag that we could get, that reversal. Right. So it's like, so this would be maybe a zone fade for a reversal, which I could have maybe 3/4 off, and then you could go long here. And then this would be a zone fade for a tradable reaction where I might go all out here for like, a decent scalp or whatever. And I can think like that on that day. That's the way of approaching markets that I feel most comfortable with is day trading, the essence of it. Because it's a multiple time frame approach, I can then go on to these larger time frames. But when I start to do the portfolio thing and you didn't DCA properly, which I didn't give a reload signal around the 60 to 70s, which was a mistake, flat out. You know what I mean? You just got to learn from your mistakes. Now my body experiencing FOMO, I have some, like I said, a lot of uncertainty. So it's like I still can't recommend that we do two mistakes into not one mistake into two now. You can see this morning as this was popping up here, maybe people thought that this was going to break out, but I was seeing that we were in this resistance zone where we tried to break out and then we didn't. So it's a potential on this shorter time frame to be a false breakout or a left shoulder head, right shoulder, head and shoulders reversal pattern, and we got the reversal. Now I had each of these lines is a support or resistance zone based on key reference patterns. They're drawn ahead of time. Look how well this worked at the bottom of the zone. You could have got a nice trade, little scalp there. You're not necessarily holding it to here. Here you might have held it for longer and have a runner in because you're, like I said, I'm more bearish than bullish at this point, but I don't know what's going to happen at this point, guys. Like my gut in my body, for the intuitive part of the system is uncertain. I don't know. I'm going to show you some objective things. For example, on shorter time frames, I can show you there were some divergences on the 4-hour. Not this, I don't really see this on the CCI. I'd have to go on the RSI to do that. But, just looking at this pattern, where we are on the daily, which I'll go to now. Okay, so let's go to a good daily. Let's go to the indice. So that's right. We have this bear flag. We try to break out the 200 moving average, acted as resistance, and now we had the spinning candlestick selling tail pattern, whatever what you want to call it, and the odds were that we were going to break below it. Now we broke below the trend line resistance. Now we're still holding above that 80K level, but I mean the cards are on the table now more that this bear flag pattern was not validated. Now it broke above it. I mean, even if we held below it, I mean technically, if you look at this candle, we rose, then we closed here. Did we hold above it? No. This one we broke above it. Then we kind of closed above it, but technically you need a weekly candle, and real classical technical analysis, you need 2 weekly candles for that confirmation. Then the bear market is invalidated, and we can at least have a rally up to maybe the high 90s, where remember this key swing high, right? Remember in a bear market, by definition, you need to make lower lows and lower highs. Lower high, here's a high, here's a swing high, and this is the previous swing high, that's the swing low. And consequently enough, this would have to break for the bear market to be invalidated with conviction. And the other thing too is we are now testing this swing low here, which if I draw a high volume node market profile here, there is a high volume node here, which I did have on a different chart. It might not be on this one. Yeah, I had it at one point. As you can see, I moved this one back just to flip back to the bulls because, yes, we had this reversal, but there's a slight little tail here because now we're testing these two highs and this key swing high here, or pullback rather. Not easy time to be in the market. If you're trying to reload a portfolio and that you hit in DCA in, this is a tough position where you have to, in my opinion, sideline until the market tips its hand. And And if this idea is invalidated, we close above it, then you'd have to unfortunately buy on the confirmation because at least it invalidates this pattern. But we know the better move, obviously, is at this point, like on this one, we handled this one much better because I was position trading for you guys and I gave a sell signal for not only the trade and the portfolio. And then we exited right around 95 and it got only to maybe 97 something. Why didn't I do it on this one? I don't know. I think maybe I went more into prediction mode, even though I knew like their odds were that it went down this much. It's over 50% down. The odds are that it's going to have, markets don't go, they move in a series of thrusts and corrections. That was either a good place to put on at least 30 to 50% of the portfolio for a DCA and put on a position trade long. But I was still only maybe shorting. I've been shorting since I gave this signal. And I basically mostly been shorting as we came up into this resistance zone. And this one actually got me stopped out a couple of times because this one's been a creeping market. It's a different type of energy coming up. It's not necessarily as intuitive as the last time we've been up there, although it hasn't violated, like I said, this bear flag that we're in a still macro downtrending market with the RSI now in potentially oversold territory, not confirming anything. What you would need to do is just to flatten out and then break below the 80, and then cross, and then you'd see the confirmation that we're in a bear trend. But, warning signs in overbought territory. Like I said, this is a trend line that's held in typically overbought territory in the momentum indicator. And now we've tried to make a break above it. Now it looks like it's a false breakout. Now, if we go on the lower time frames, which for our purposes as investors is the least important, but a lot of us are still short-term traders primarily. That's what I consider myself, mostly doing income-producing trades. But I also have bags of portfolio as well, right? This head and shoulder now trend line is being tested as we come up along with the VWAP because the intraday bias and the sustained momentum has been down. Now, it's not incredibly extreme, right? Because on the daily call, there's these weights that we talk about. But there's also the magnification of the weights. Perhaps maybe you are weighting the bigger picture pattern head and shoulders times 2 for some reason because of the length of it, right? But then you might balance that out by saying, hey, well, the short and intermediate time frame have been bullish. So you have time frame alignment. Bullish, that could be extreme too because that's time frame alignment. And I agree with you, except for the fact that we are now confronting the short and the intermediate term, which are aligned, are now confronting the big picture bias, potentially of the macro downtrend energy. Right? What you don't see on this 2-day is the 200 moving average that we're hitting. But I tried to draw this channel to kind of show the different time frames that we're looking at, because the last 4 to 6 months is a big picture bias that's important, that should be weighed in the context of this trend here, right? So I mean, this leg down is massive and it's smaller than this one. So at some point, right, the market reverses and the market goes from a down market to a sideways market, then to an up market. But if the lows are in and we're now out of the bear market, this would be the shortest bear market we had in Bitcoin's history. It would be an anomaly. There's also something I kind of want to show you guys on the Bitcoin educational time cycle chart here. Let me get that going. I'm just looking for different ideas on different time frames to see what has worked. I mean, I have orange circles here for every single inverse zero line reject, which is a reversal setup for the bears, a bearish setup on the 2-week chart. And the green circles is a time that it failed. And this is a time that still remains to be seen. But if I add up all the oranges and the green, I think it was 10/11, which is 90.9% times that when we saw this pattern, an inverse zero line reject on this momentum oscillator, the bears then took control. A very risky time to allocate. And they work more strongly in a bear market. So as you can see, that what is an inverse zero line reject? When the CCI stays below, mostly you'd want the turbo line, and a huge overshoot with the turbo. This can pop over a little bit, but this is a really good one. And we are now up into this resistance meridian line. The other times, right, this one, not even as pronounced, reverse down here. These were 3 times that it worked. Here's a time that's really good. And you could see it was a fake out. Everyone was trying to buy this bounce breakout. That's kind of up here. Then we had a huge move down. When was the time that it failed? Well, this time. But you notice that the times that it worked, it was after the double top, and we were in a macro downtrending market. After the double top, macro downtrending market. This time, clearly macro uptrending market, big picture bias, pullback in the context of that bigger picture bias continuation pattern. So when this was saying it was a reversal setup, the green indicates that it failed and it kept going up, right? But that's why we have a scale. Like I wouldn't give this signal as much weight if we weren't in that after doing this after the double top. And remember, this was one time out of 11 times that I counted that it failed. 10 out of 11 times it worked out. And this is for Bitcoin's entire history. So I just wanted to point out that, yellow not really going over huge blue separation. Now, yellow not going over blue separation. Here's one. And I went back and I just put the circles where it worked out. I could squeeze the log and you could see it. If you want to see a couple other examples of it, obviously it worked really well. After the Bull 21 top, worked well on February 20th before we had the COVID crash, right? There was this, and this was an uglier one than we have today because there was the yellow overshooting, but the blue did too. You really don't want the yellow to overshoot as much as it did here. So even this ugly one worked out. This is a textbook one, right, where the blue overshoots a lot and the CCI can't, the turbo is. So it's like showing that the momentum underneath the price action is weak. And of course, that was a false breakout. And this move went from 8,627 down to 3,221. I mean, these are huge moves off this in a bear market. So, I mean, it makes sense from if you're a believer in the 4-year cycle, which is the prominent idea. But, this time has changed. Narrative is always challenging it. Nobody knows the future, blah, blah, blah. Right. Another inverse zero line reject on the 2-week chart. And the reason why I think it's really important because this 2-week close this Sunday is in alignment with the May 11th Bitcoin time cycle chart. So we have not only this inverse zero line reject on the 2-week that's worked 90.9% of the time, but then we have this inflection point happening the Monday up, right at midnight. That's when the May 11th week is. So there could be this huge momentum shift. That's what the inflection point predicts. What it doesn't do in and of itself is predict which direction the trend is going to break out of. It says there is going to be high odds for a trend. And I can show you that chart as well and how well that works right now. And as you can see, we hit this zone, but the reason why this would be for a tradable reaction is because the bias is down on the day. And we have, like I said, this higher time frame idea. But still, even on smaller time frames, they move in series of thrusts and corrections. And this isn't one of those pure downtrending days where it's so bearish that you don't want to scalp against it. I mean, this zone, but if you do take a zone fade for a tradable reaction, not a zone fade for reversal, wait to the back of the zone, middle to the back. On this one, because you're expecting a bigger move, you can take it middle to the front. Obviously, you'd want to wait for a wide double top, ideally into those zones, but we don't always get those. And I didn't short this. I'm sidelining, right? My last trade was this intraday bounce breakout where I took all out here because I knew I was just, hey, this thing's overdone. And that was one of my first longs that I've taken in a long time. I basically shorted here, shorted there, some good wins here. This was a loss. I think this one was too. But remember, it's all about averaging out. These two losses averaged out to smaller than this win. So overall, over that sample size, I'm up. And I just have to know when to step out. I thought I had good odds to reverse today, but because there's a lot of pressure on me to get a position, maybe unconsciously or whatever, because I had to think from a portfolio perspective. So I was like, okay, I'm not necessarily going to put extra pressure and start income producing trades, even though I see these fractals zones on the key reference areas are making sense. I mean, this is encompassing this key swing high, which is broken support, broken resistance now acting as support. And it also is in confluence with the key low here on May 5th, the trading day of May 5th, which occurred this low on May 4th. So it's the low of the day. But like I said, let the market tip its hand, and it's starting to do that. Let me save this chart, get out of here. And let me get into this weekly idea. Oops. Okay, so like I said, these are Bitcoin time cycles. I've shown in the past that they work really well for inflection points. We can look at how that works out in the past. Just as an example, this double bottom right was in a sideways phase for many months. hit this time cycle, smashed out of it. Here in a sideways phase, uncertainty. Is it going to be a trend, breakout or breakout? Here, right here, and trend starts. Here in a very long um, bull flag, because we're in a bull market and it's descending, right? This is a bull flag and smash up. This is a bear flag in a bear market. So just to show that, but nice timing and smash. I mean, this helps you with like timing and not just price level. So what it's showing is that there's going to be some type of resolution to this rising wedge. It's either going to be an obvious uptrend or a breakdown where we go down and start testing the bottom of the channel and possibly even break out of that. I don't know if we'll get that way. Start DCing way before that. We're not going to take that risk again that we bounce off and have to do this again. But at this point in time, there's going to be a resolution to whether this bear flag is validated or invalidated. Right. So if this bear flag was occurring in a bull market, we would give it not as much weight as we're considering it today. As well, like I said, the momentum indicators in overbought territories, not diverging yet. I don't want to or at all right now, but still in a position where it's like, hey, be alert. There may be some underlying weakness, like I said, especially here. This trend line is attempted breakout. Now it's underneath it, but that is why this Sunday's close in alignment, which is on May 11th, on the Monday of, and the close on the Sunday prior, is very important because you need that kind of confirmation to at least have some edge of whether this is a false breakout or a breakout, because we couldn't even really break this 200, let alone some of these other key reference areas up here. We have a key swing high. There's a high volume node. In fact, we can do that. Object tree, we'll get the VRVP going. Right? I mean, we're coming up into other areas of problem areas. Now, this is a low volume node, and there was a lot of wicks there. So that's an area where buyers and sellers did not agree on price value. They rejected price both ways. And that also can often act as a very key area of support or resistance. In this case, resistance. DCI, there's a hook from extreme showing that it's overbought here on the daily as well. And if you were doing this horizontal trend line break, these would be the areas where you'd be taking profits. Just like I said, when we were swing trading here, we were in abundance mindset to take profits here, but we didn't actually swing trade this, maybe getting too fancy, expecting a lower price level, seeing a little bit of this little push down and seeing some indicators showing it was, but there was this Vegas here. Like I said, you got to just let that go. Now in a position where you're feeling, my God, did I miss this? What's going on? But do you really want to become someone's exit liquidity? Can you at least wait till Sunday? And if you're really going to follow classic TA, be the following Sunday. Because if this starts reversing, this thing could really fall on itself, where a lot of traders who did had the idea to trade on the bottom of the parallel channel like we did on the prior one from our portfolio, right, are now can be happy taking profits. They're not the only ones looking at certain indicators that are showing that, hey, be wary. Now, some from a non-technical perspective, there's talk of how, the Bitcoin, the recent moves are being propped up by this insane strength in the S&P. Will this party just continue to go on forever, or will there be some type of, profit taking? These are the type of questions that you should be asking yourself when you're in blue sky. You don't want to let your emotions take over and start buying at the top of a market when everything's. Can you be patient enough? We had a V recovery and went a huge extension up. Like I said, I'm monitoring the ES day to day, not just from the daily. Not that we trade it anymore. We used to trade this live, but we do have a technique that I haven't seen many folks talk about, which is these market internals underneath the hood. And this was one of the first days that the price action. We had a bearish most of the day, not extreme, right? But we had a bearish advanced decline showing that the price action was not being supported by most of the markets on the New York Stock Exchange. We're talking over 2,000. Most of the stocks were down on the day. It wasn't neutral as compared to yesterday's close. You have this gap that we broke down from. The internals were somewhat two-sided, but with a slight bearish skew more towards the afternoon, with most of the tick printing at -700, -800. And those are pretty bearish reads. you'd like to see it at minus 1,000. It wasn't overwhelmingly skewed to one side, but it showed a general tendency for the bears to have a bearish intraday bias, just not with a lot of sustained momentum, but enough momentum where you can see that it was mostly skewed below. So this is underlyingly showing, right, moment to moment heartbeat of buying and selling. So that was supported by that, but also, like the number of stocks trading on the day, most of them, relative to yesterday's close, more so, more of them were down. So that was a minus 600. Stocks were down, supporting the price movement. We're keeping an eye on this because short term, Bitcoin could go down with it. But like I said, I'm only bearish because of the bear flagger in the intermediate to short term. Because even with the sailor talk, I'm only intermediate, maybe 3 to 4 weeks possibility for some more down movement. Because what they're ultimately going to do is just buy more Bitcoin. Once this is and a lot of the bulls are saying that the Clarity Act, it's going to rocket ship off. I mean, that's possible, but also no, we've been really, really bullish for like a month or so, and you have to also sometimes figure in that maybe it's already been factored into the price to not. So that's why we have this probability calculation scale on our system. So we're looking at it holographically and rather holistically from many different angles, so we don't get swayed by one thing. And if things tilt more so one way or the other, then we have an edge. Right now, there's a lot of conflicting signals. Obviously, the price action's been very strong from multiple time frames of short intermediate term, been an uptrending trend channel, but it's still within the bear flag. It's just now Bitcoin's really trying to break it in a bear market that was not typical of what people would expect, but maybe the unexpected happens because the markets don't always do what we expect. Right now, taking a position of uncertainty till it tips its hands more, I think, is wise. If you got extremely bullish and tried to buy a breakout without waiting for at least one daily close, but ideally one weekly close, and ideally, really classically two. And if you bought this breakout just on the momentum, then you're now underwater with a false breakout pattern. And maybe some traders are freaking out and might sell with big positions. Notwithstanding, you have a lot of short traders piling on, which can add that impression to the spot that it's overwhelmingly being driven by these futures and not necessarily spot. So is it really reflective of larger time frame buys? Also, maybe short intermediate term, the talks of this Michael Saylor, the man who said you should sell your kidney over your Bitcoin, is now selling to cover short-term obligations, which he'll then use to appease investors, which will then attract more shares, more investors as he dilutes. And then his company is a Bitcoin acquiring company. So he's going to then take that and buy more Bitcoin, which will ultimately smash the price. But wouldn't it make sense for him to sell its strength now, crash it, and then buy it, and then start the bear market after this, because he needs to sell now? It just happens to be still cyclically in a bear. We just happen to be cyclically testing very strong, larger time frame structure. Maybe traders that got wrecked are holding as we come up into this larger time frame. Maybe investors see that and say this might be their last pop. There's a lot of reasons why. You could have spot liquidity drying up. They could try to lure in retail to sell at them to then get higher prices. I mean, sometimes it is good to think in social market terms, but don't go crazy with accuracy-based thinking. That's why the essence of trading on a day time frame leads one to expectancy-based thinking, which is not, will this work out now? Not, will this be a breakout or breakout? But if you decided to do X right now, would that work out over a large sample size enough of the time to make you money over the long run? And the answer is, if you went long now, no, maybe not even, and obviously not, in my opinion, not even short now, because it hasn't resolved itself yet. I mean, this trend line has been very strong. I mean, you could come down here, hold here, and then break out. Come up here, and then, there's all different possibilities. Accuracy-based thinking will make you nuts. Looking at the probability calculation scale in the moment and deciding whether I'm going to go long or short on one of my key reference areas, since I'm fading key reference areas on non-trending days, and getting on board the trend early on trending days is the essence, simplistically, of the strategy. And we have obviously a pre-market daily call that helps us determine what we think the logical probable day type is, whether generally, categorically, non-trending or trending. This is, sideways to down, a hybrid day with more intraday bias, but not with an insane amount of overwhelming momentum. I mean, look at this day. Oh, here's an N pattern. I mean, whoever saw that, V sideways. There's just been a lot of, you could see here, this was folks that got excited about the liquidity. And then when this came up, they said, okay, we're going to short this. I got even trapped by that. And, hoping that it would break down because it's an upper level like it had in the past here with these reversals. And then, getting largely driven by short traders getting stopped out, not necessarily driven by larger institutional volume buying at this level, as some of the underlying indicators are showing that it's futures driven, not necessarily spot. At the same time, the number one principle is that anything can happen, and uncertainty is a position in the market. It's the position of inaction, which is the hardest position for anyone to take. I think folks would rather take a position now that could be an ultimately huge losing position. Let's say if they just start longing entirely into a portfolio now 100% without DCAing or waiting for lower levels, than to miss out on something in their mind. The pain of that is stronger, the FOMO, not the fear of, losing it. It's the fear of missing out. It seems to be stronger because the immediate biology has been affected by the uptrend. It's harder to remember the macros zooming out, big picture downtrend. It's not as immediate in the body. But that's why we have a counterintuitive system that allows for the essence of the body and good. Because it's not that those categories in your daily call that say, how do you feel about being short or how do you feel about being long are just there to appease your energy so you can look objectively. It is there. But also, if you do this long enough, your gut becomes a flow state of unconscious competence. You're flowing, you're doing the system organically flowing now because you've done it so many times for so many years. So that actual category could be really intuitively accurate. The problem is that traders think that that their intuition is right before they've ingrained principles of counterintuition into them, to the system. So they follow their intuition without the proper training is always going to be wrong, or most of the time going to be wrong. And it only takes most of the time in this game, or one time where you're emotional with incorrect position sizing. I mean, a lot of channels don't teach this fixed percent risk rule as much as us because they are afraid to day trade and they take huge position trades where they could be down way more than 1 or 2% in their account, and they'll add to margin. And it's tempting because you can fall in love with your idea. It's harder to admit quickly and cut your losses quickly and have that. That's why that the system is a living dynamic system because the markets are dynamic living organisms, not mechanical clocks. But there is one aspect of the system that is mechanical, and that is your risk management. Do not lose more than 2% on any given trade ever. 1.5%, you should actually get good trade location and try to get it at 1% or less per trade idea, because you could have a winning system and just get 10 losers in a row. It could happen. You don't know on any given trade whether it's going to work out with that margin of error. If you're doing it at even 2% on 10 trades in a row, you lost 20%. Psychologically, you might be so burned out from it, you can't take that next trade, which then makes most of it back. So your one shot is not to bet more than that. It's to build up your market reading skills, follow your fixed percent risk rule, where I think you should actually take it from 2 to 1.5. Don't violate it. If it does get broken once in a while, just say to yourself, great traders quickly recover from mistakes, and I'm a great trader. When you follow your system with correct process, regardless if you win or lose, you say, I followed my system, and that's what great traders do. You know what I mean? The Y double top it turned into a V pattern wasn't really against the system. It was just a Y double top. And the lesson learned is that, bullish liquidity, even when you're approaching bearish larger time, big picture buys could, maybe extend more than you think, or there's too much choppiness. But what we want to understand from this bigger picture perspective is not to just go all in now because you're in a position where you didn't reload, which some folks are on the sideline right now. It's a tough position to be in because of all the pressure now that the lows are in, and we're going to have a bull run while ignoring the many underlying structural reasons, cyclical reasons why moving up into this resistance is not something that one should completely ignore. At the same time, the way we got there versus the other times that we tested the trend line is different because it's building a staircase pattern, which I mentioned. So it's like the way price arrived there, higher highs, higher lows. That's why these parallel channels represent the bear flag, but this trend line is sort of this ascending wedge type pattern. So, breaking this could start the momentum, and then, this does not have to break at all if we even get there. Speaking if thens, don't say it will do this. Don't get caught up in one idea. And if I catch myself writing the channel or speaking in absolutes, I correct myself because we're human beings. But it's tough to, uh, if you're listening to a lot of folks that get a lot of coverage out there, which I don't necessarily recommend, I think you should listen to follow your system. But you'll see that a lot of folks that do talk about the markets will not speak in if-then statements. They'll speak in absolutes. But at the same time, you want to say, hey, these are the probabilities, and they're leaning more towards this one. So I'm going to go with this setup because it's a high probability. Or if they're more balanced, then you could do inaction. That's fine too. Let's see how it tips its hand. Why allocate even half on if you don't have a position? When if you did actually get a position at 68,000 on a larger position side, why wouldn't you want to take profits right now potentially into this resistance zone? We're not the only ones thinking that. That's what the whole bear flag is. It's these position traders pushing, and everyone gets faked out in the failed rally because it's from the bears are still in control from a macro perspective. So that's why we got to zoom out and maintain some rationality. At the same time, wait for confirmation. If it's invalidated, we break this and it's the 200 becomes we're crossing it, a weekly candle close on Sunday would increase the odds that we have a balanced breakout pattern, which increases the odds that we're going to go test the high volume node around 88, 87, and then obviously the 98, 97 swing high zone. Flat out. Those have to break in an anomalous event like COVID for that to happen. But I mean, why? I mean, if the war starts again, if the peace talks they have get pulled, the party could slow down a bit. I mean, go away in May, right? Party in April, go away in May. So go away in April, sell in May, something like that. I mean, just there's this tendency. But if you look at Bitcoin's history, April has been typically a good month. May hasn't been necessarily a bad month, but we got to look at where we are now. Let's look at the patterns. Let's look at the resistance. Let's look at the macro, where we are on the 4-year cycle. Technically, it would be October when the sideways channel, we might get lows before then if the bear thesis is correct. Let's say we break down by May 11th. You could see that this resolves itself and it's in a clear downtrend. And the pull is evident. It would be like this would be the May 11th, where you can see the pull after the fact. But I mean, the trend really started here, right? I mean, how quickly it got there. That's what could happen here. This could be the start of it. It's hard to imagine it, but yesterday the emotion was, how could this thing that got nearly to 83 be down now below 80? It was just at 83. Someone's very happy. Smart traders are selling into this position trades, and then other traders that even have portfolios have been shorting, as I was recently, until I decided to step back and just breathe a bit and let's see if this market can tip its hands. But after you saw the selling tail candlestick pattern that popped back up into the bear flag, it was not violated. It wasn't a candlestick above it. The body has to be above it. And then I'm not surprised that the reversal happened, because that is a typical that candlestick pattern in that market context. Testing the 200 macro bear up into resistance, multiple leg counts out, hook from extremes on the CCI, RSI, and oversold. Right? Why can't we get a one day off? Now we got to see how this plays out. Bulls have been buying on every pullback. I just want to let you know that on every pullback we got here, there was a very strong zero line reject on the daily, and we got a huge move up. Remember the one I showed you on the 2-week, how well that worked out? Just keep that in mind. Higher time frame. That's this Sunday. Look at this pullback. Zero line reject. Huge move up. Look at this zero line reject. Another pullback, huge up. Maybe we should buy this pullback, guys, right? It's this high. Let's see if there's a zero line reject. Nope. No zero line reject, guys. That might be the key. The 2-week might be the key this Sunday, and the fact that there's no zero line reject on the daily. We don't want to get into accuracy-based thinking because I don't know the future. And I'm telling you, this sport humbles everybody. Just when I thought we had this figured out and this thing was going to break down, it bounced off the trend line and went way up. Ignore the Vegas, ignore the hook from extreme. There's a double bottom here. And now I'm in a position where it's like, if I was healthily long on a major reload here, would I then want to just add more risk? I'd probably be in a position right now where I'm thinking, I want to take profits because this might be another bear flag, just like the same strategy we did here. So just think about the other side of the market and how they're feeling as well. A lot of longs positions that got long in this buy zone are happy here. And now when they see this, they might be tempted to take profits as well. So we don't want to become their exit liquidity because we missed something and FOMOed into it. There's going to be a lot of opportunities. We'll get it. We'll get another entry, but an entry right now is not below a bear flag. That's incorrect process. So hopefully that helped looking at these different things. Hopefully the 2-week could be a secret decode. I showed you this kilo, how this could be resistance here, the buying tail around 87.67 or 86.85. 100. And like I said, keep your emotions in check. We're going to find an entry for the portfolio. And once we have a more clear direction here and this resolves itself, then we'll start initiating trades again, whether that's bull trades or short trades or long trades, depending on whether this is a breakdown or a breakout. The longer it spends below the trend line, greater the odds that it could break down. But like I said, it still has to break the very bullish last intermediate and short-term bias, that stair-stepping price action. And that's what we're going to be keeping an eye on. All right, guys. Talk to you soon. Bye.